Hello traders, welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado and it's a pleasure to share with you some of our plans for this week. Let's start with the euro. The euro has been building a triple zigzag, a double zigzag formation, where we have the first corrective ABC for W, the connector X, and now another ABC. The plan, the bigger picture plan on the euro on the daily chart, is having another leg down to complete what I'm calling the second wave. So once we have the completion of our second wave, the main plan is finding the end of that wave 2 to jump into a bullish setup that could bring the price back to this area here, or more if it's the wave 3 is likely to continue higher and probably move to the to the 120 or something like that area. But we will talk about that when it starts showing the setup. For now, we need to focus on finding the end of this X. That's going to be our main focus here. And that's what we are going to perform or plan on the lower time frames using the Elliott Wave theory. All right, so let's go back to the hourly chart. Here, as you can see, we have price above this important area, the 107.60. So actually, let's draw a resistance line right here at the previous high. This area is absolutely key because if we have a nice red candle crossing this area, we can consider that this is the high on the euro, and from there we can start following the leg down, right? But on the other hand, what I'm thinking that is likely to happen here first is that price builds one more leg up. Tomorrow we have the Fed, so it's gonna be a busy day. One more high, looking at this high here, and if the price rejects and we have a candle closing under the wave 3 on the hourly chart, that will be the selling point, and the stop loss somewhere here above the high, some points above whatever the high will be. And that will be the first entry, right? As a second entry, when the price moves under this 107.60 area, that will be the second entry. And then we can wait for the price to complete wave 1, and during the pullback wave 2, we can consider selling to add to that setup, and the plan is capturing at least this leg down back to the 105.20. As you can see, we are triggering the trade at the market extreme with a defined risk and a lot of potential to the downside. So let's see how it's going to play out. But seems that it's going to be pretty interesting, the setup that is coming on the euro. The S&P also has been moving in the upward direction. Here we have a triple zigzag on the daily chart. We can see what's going on. I'm working with a diagonal, ending diagonal wave for the second wave here. Here on Elliott Wave Street, we have been selling, we have with a bear bias all the way down, and this week too, but this time is a little bit harder because this wave 4 has been complex, really complex. The main plan that we have is having the S&P coming down to the previous low before the reversal, before the continuation higher. So I think we are likely to have another visit to this area, and then at the rejection we can start looking for the continuation up, right? So That's going to be the big picture plan. Of course, on the lower time frames, I'm trying to find out if this wave 4 it's going to be done or not. And that's what we can do together here on the hourly chart. So as you can see, price just has been moving up and up. We don't have anything. The trend is absolutely bullish today, and there are no significant reversals or anything interesting here yet. However, if the S&P fails this time to reach a hard high, and let's say that we have some sort of rejection here, right, instead of building the hard high, and the price rejects, that will be the wave 1 and 2, and here we can have the sell-off. There is already an interesting validation right here. As we can see, the price barely closes under the previous high. This one is hard, right, because the close is just right there. So let's continue to lower time frames. Let's move to the 15-minute chart, and we can see what's going on. So if this is the reversal, what is likely to happen actually on the 5-minute chart is going to be easier, and I'm working on a new course that I'm calling the Elliott Wave blocks to find the precise levels where wave 2 can finish, where wave 2 can be done. So in this particular case, I'm working with this area where we already have the rejection here, right? And if the price comes up here and rejects, that will be a hint that is failing to continue higher. On the other hand, if the price can continue higher here, let's say that breaks up this area, we're likely to take out this high. And right here we have to be ready in case that the price quickly, and that part of the process is extremely important. If the price quickly rejects and closes below this area again, that's where we can start working. In the meantime, all these zigzags, all the corrective waves, everything should be to the upside. Unless it rejects here or here, we can give it a chance to find the sell trade. Let's have a look at oil. Oil has been working fantastic, traders. If you have been following our analysis, we have been working with a bear setup, with a bearish setup. So we went short here, we went short here, we shorted here as well. So has been a fantastic way of working here with these setups. So the plan on the lower time frames is to continue following the trend. There is an interesting retrace. You know, each retrace is going to be of course a discount. So when we are in a trend, when we are in a clear trend like the one that we are seeing these days, all we need to do is understanding the corrective waves and following the trend. So that's what we can do here on oil. If we go to lower time frames, we can see that there is a double zigzag formation for the wave 4. So our mission is finding where this is likely to be done. And we need validation, but not too much validation, because too much validation means a lower entry. So here on the hourly chart, I'm just looking for a candle to close under the previous wave A, and that will be the reason to trigger the trade and to sell the oil, the CL, or any instrument that you like to trade with oil, to target this previous low. Right? That's it. Simple, right? Trading should be like that, simple, even when we use tools like Elliott Wave, but at the end, the entry and the analysis should be simple. So that would be the plan here on oil, also finding the end of this corrective wave to follow the leg down. We have, traders, a fantastic membership on ElliottWaveStreet.com. You can join us and you will get the live market analysis for the Forex, the stocks, or the full access. You will get also education. You will get the daily videos. You will get the trading plans. You will get the afternoon report. You will get access to the Elliott Wave crash course and the volume profile course. And you will get access to the course that is coming about the Elliott Wave blocks. That is a new technique that I'm applying to find the end of the waves. So sign up now. We have the special offer of $19 the first month, and you can try out our fantastic membership. You will get immediate access to the members area where we have the wave counts, where we have the education, where we have all the tools. All right, traders, please have a fantastic week. I'll see you soon. Take care. Bye-bye.